guys, welcome back to a brand new video. I'm RexFinance, and recently I made a $60,000 move in the stock market. And as far as I'm aware, no other YouTuber on the platform has done anything remotely close to this move that I've made today. So, of course, in this video, I'll give you the exact details of the move I made, the different pros and cons of it, and also why exactly I made this move. So I hope that's enticing enough for you to stick with me throughout the rest of this video. But before I get into the exact details, I just want to ask a couple favors of you. Please hit that like button down below. Please hit the subscribe button if you're not subscribed, and also leave me a comment of your favorite stock that you've been buying recently and why exactly it's your favorite stock. But without wasting any more of your time, let's just go ahead and dive into this. So today I actually went out and purchased $60,000 in a swing trade, and that is very untraditional for this YouTube channel. If you've followed me for a long time now, you know that I am very long-term focused with hopes for short-term gains. However, with this move I've made today, this $60,000, this is a shorter-term move. This is a swing trade, and I bought $60,000 worth of a 3x leveraged small cap ETF. I know that sounds like a mouthful, but I'll put it simply for you. Basically, if the Russell 2000 goes up 10%, I will go up 30% because of this position, because it is 3 times leveraged. However, on the flip side, if small caps go down 10%, then this position of mine will go down 30%. I don't even need to say it, but this is a very risky investment. Basically, if small cap stocks don't perform well, this $60,000 that I've put into this position is just going to be eaten away because, again, this is a 3 times leveraged ETF. The only thing that I would say is more risky than what I've done today is purchasing short-term call options, because call options have an expiration date and you can lose everything. With the move that I've made today, it's almost impossible that I would lose all $60,000 unless the global economy literally vanishes. Time is not against me with this investment like it would be with call options. So why exactly did I choose to put $60,000 into such a risky investment? What all has to do with the fact that the stock market has been in a correction. And I know that sounds counterintuitive, but just stick with me here. If we look at history, we can see that since 1974, there have been about 24 stock market corrections. Out of these 24 corrections, only 5 have entered bear markets, which is when the stock market goes down by 20% or more. A correction is when the stock market goes down by 10% or more. And the 5 times that the bear markets happened were in 1980, 1987, 2000, 2007, and 2020. But that's besides the point. I want you to look at this graph here on the screen now, which depicts all of these different corrections in bear markets. If you look deeper into this data, you'll find that in the vast majority of these bear markets and market corrections, small cap stocks actually outperform the rest of the stock market when they're coming out of the correction. This is usually because small cap stocks are much more risky, and during a market correction, nobody wants to take risk with their investments. They want to be invested in what's safe, so they sell out of their risky investments, which for the most part are small cap stocks. However, the reason small caps typically outperform coming out of the correction is because of the same logic. When the markets start to tip back into the bullish territory, investors are much more willing to invest their cash into riskier investments, which again are the small cap stocks. And something very, very interesting has been happening over the past month and a half or so. Basically, since January 27th, the S&P 500 has returned 3.05%, which is pretty good for a month and a half. But the small cap stocks have actually returned 7.27%. Well over double the return of the S&P 500. So we're seeing right now small caps significantly outperform the S&P 500, which is typically the stock market benchmark. So this could be telling us that we're coming out of this correction, and we just don't know it yet. However, there's also no telling that this is going to continue, which is part of the reason I didn't choose to buy short-term call options, and I bought this ETF instead. There is no expiration date for this position I've made today. It can take as long as it wants, but I know it will happen. I know that small caps more than likely will outperform the rest of the markets, and time is not working against me with this position like it would with call options. And better yet, I get to keep that increased leverage because it is a 3 times leveraged ETF. We also have something interesting happening with valuations. Small cap stocks right now are valued basically at historical lows when you look at forward PE ratios. However, large cap stocks, their valuations have remained high, but they are finally coming back down. Basically, large cap stocks were the last class of stock that had yet to fall back down in valuation. Now that we're finally seeing that, it gives me even more confidence that maybe perhaps we're finally coming out of this correction. But again, there's no telling. Nobody knows if this is the case. This is just an educated guess, and it's my opinion. Also, if you follow my channel, you know that I very, very rarely choose to purchase ETFs. It's because I don't want to pay the fee. Basically, whenever you purchase an ETF, whoever manages that ETF is going to take a certain percentage out of your gains every single year. For example, with this ETF, the expense ratio is over 1%, which is very, very high. It's because it's a leveraged ETF. So what that means is if this ETF returns 10%, they take away 1% to pay their fees. Basically, me as an investor, although the ETF returned 10%, I will only return 9%. And to me, that just makes no sense at all because I believe I can at least match, if not exceed, the return that most ETFs see on any given year without having to pay that fee. So this is exactly why I've chosen to make this a swing trade or a short-term investment rather than a long-term investment because I believe I can outperform this ETF over the long term. So you might be wondering, okay, then why are you choosing to pay the fee this time? Well, it's actually pretty simple. Basically, I have $60,000 in cash right now, and I don't know what I want to do with it. But I sure as heck don't want to be sitting on $60,000 in cash in this current market. I want basically every dollar I have invested into the market right now because stock market valuations have come down dramatically. And again, we're in a stock market correction, which typically ends up being the best time to buy stocks. I honestly believe that this is a time I want to be fully invested into the stock market. Again, I don't want to be sitting on $60,000 in cash. I want to invest all of that cash when I can. So basically, I've purchased this ETF because I believe small caps are going to do well, but I don't really know what individual stocks I want to put this $60,000 into yet. And I would way rather have it invested in something than nothing. So right now, I will gladly pay that 1% fee to be invested in this ETF. But as soon as I figure out what I want to do, I am going to be selling my $60,000 position in this ETF to buy whatever I decide to buy. If you guys want my buy and sell alerts or want to know when exactly I decide or what I decide to buy with this $60,000, please consider joining the membership down below by hitting the link in my pinned comment to my Patreon. Or if you're on a computer, you can hit the join button located right next to the subscribe button. The community in the Discord server is awesome. I promise you it's well worth the money. It's literally like the price of a lunch per month. It's not much. I would love to meet more of you. I will say right now I'm debating between 2 or 3 different options. I might split the money into each of them individually, or I might put it all into one of those options. I just have not decided yet. Again, if you want to know when I decide and what exactly I buy, please consider joining the membership down below. The last reason I want to lay out of why I purchased this ETF is also pretty simple. It's simply due to the fact that I have a tax bill coming up here that I have to pay, and I would much rather use this cash I have right now to pay that tax bill than be forced to use other cash, other places to pay off that tax bill. I really don't want to have to sell investments to pay off taxes. I would rather pay it with this $60,000, which is another reason I chose not to buy call options, because with call options, again, you can literally lose everything. With that, guys, I hope you really enjoyed this video. Again, don't forget to like and subscribe down below and comment below what your favorite stock is right now and why it's your favorite stock. With that, I hope you have a great rest of your day. Stay blessed. I'll be back with a brand new video later this week. Peace out.